All right, let's break down an earnings call that was a real Wall Street head-scratcher. Humacyte's Q2 report, well, it was a tale of two completely different companies. One that looked like it was struggling on paper, and another that seemed like it was right on the verge of a major breakthrough. So we're going to unravel this fascinating tug-of-war.
So, what's the real story here? Was this a massive 70% revenue miss that totally justifies the stock selling off? Or are we seeing the quiet start of a huge commercial breakout? You know, the answer really depends on what you focus on. The last 3 months, or what happened in just the last 30 days. To make sense of it, we really need to dissect the anatomy of this call, piece by piece.
Okay, first up, let's get into the numbers that really sent shockwaves through the market. These are the headline financials that, at first glance, had traders hitting the sell button without a second thought. Wow, I mean, the gap here is just staggering. Humacyte reported only $300,000 in revenue. Wall Street was expecting $1 million. That's a 70% miss on the top line. A number like that in biotech, it sends investors running for the exits, no questions asked.
And it wasn't just revenue, you know? The pain went all the way down the line. GAAP earnings per share, which is a really key measure of profitability, came in at a loss of 24 cents. That was way worse than the loss of 17 cents everyone was braced for. So from a pure numbers perspective, the quarter was a clean miss, no matter how you slice it.
And, well, the market did not wait around. Its verdict was swift and absolutely brutal. Before the opening bell even rang, the stock was already in a nosedive, gapping down 10 to 12%. That's the instant price you pay for missing expectations by that much.
But then, and this is where it gets really interesting, management came out and, in a pretty masterful move, completely changed the conversation. They shifted the focus away from those grim financials and started telling a story about powerful operational momentum that was just getting started.
And this quote right here from CEO Dr. Laura Nicholson, this is the absolute linchpin of their entire counterargument. She's basically telling investors, hey, forget the rearview mirror, look at the road ahead. Why? Because the company's access to hospitals is just exploding.
And look, this wasn't just talk. They backed it up with a whole series of rapid-fire commercial wins. They went from just 5 hospitals to 82 civilian hospitals cleared to buy their product. Then, boom, they unlocked this massive new sales channel with the military through a key listing called ECAT. They booked their first military sale in July. And here's the real kicker. Sales in the single month of July were more than the entire first half of the year combined. That's not just growth, people. That's an inflection point.
Okay, so they're making moves. But you know, a biotech launch, it just burns through cash like a furnace. So the billion-dollar question for investors is always, does Humacyte have enough fuel in the tank to actually get to profitability? Let's dig into their cash and cost situation.
So they ended the quarter with $88.4 million in the bank. That's their war chest, right? That's the capital they have to fund everything and fuel this absolutely critical commercial launch.
But they're not just sitting back and hoping sales come in. No, they've also kicked off this really aggressive cost-cutting plan. They're aiming to save over $50 million over the next year or two, and that's a crucial move to stretch out their financial runway and, well, to keep them from having to go back to the market for more money too soon. So how are they going to save all that cash? Well, it's the tough but necessary stuff. They're cutting about 30 jobs, putting a freeze on new hires, and pulling back on other operational and capital spending. It's a classic biotech playbook, really. Tighten the belt, preserve capital, and survive until that revenue really starts to flow in.
But here's something you've got to remember. This whole vascular trauma thing, that's just the opening act. The real blockbuster potential for Humacyte, the thing that could make this a huge company, is in their pipeline. Specifically, the massive recurring revenue opportunity in dialysis access.
And you know what? They are making some serious progress here. They've already got positive phase 3 data in high-risk patients. They have another key trial that's on track for results in mid-2026, which could open up a much bigger market. And they're even looking at one of the holy grails of vascular medicine, coronary artery bypass grafts, or CABG. This pipeline, this is the engine for long-term value.
So where does all of this leave us? On one hand, you've got a story of financial disappointment. On the other, a story of explosive operational and clinical progress. It's our job now to put these two conflicting stories together and come up with a clear, forward-looking view.
This is the question, isn't it? After all the dust settles from this wild earnings report, after the bulls and bears have had their say, where does Humacyte's stock actually go from here?
Look, it all boils down to a classic bull versus bear debate. The bulls are betting on the future.
They see that exploding hospital access, that incredible July sales number, and that huge pipeline, and they're excited. The bears, though, they're stuck in the present. They see the brutal cash burn, the tiny revenue base today, and the constant risk of the company having to sell more shares to raise cash.
So after weighing everything, what's our call? We're initiating with a market perform rating. Now, why not something more aggressive? Well, because both sides have a really valid point. The operational momentum is tangible, it's real, it's impressive. But the financials are still anemic. And until that revenue ramp proves it's for real and sustainable, the shadow of a potential financing deal is probably going to keep a lid on the stock. So what should you expect between now and the next earnings call? Honestly, probably a lot of choppy trading. The story has been set. So for the Q3 call, investors are going to have one simple demand for management. Prove it. They're going to need to see that July wasn't just a one-time fluke, but that it was the real beginning of a brand new, sustainable growth story.
And as always, please remember that this is our analysis. It is not financial advice. You should always do your own homework before making any investment decisions.